All right, folks, buckle up. We're about to embark on an exciting journey into the world of finance. But don't worry, this isn't your typical dry and boring finance lecture. We're diving into something a bit more thrilling and accessible. We're diving into the wacky world of finance, specifically something called peer-to-peer lending, or P2P, for those who like their acronyms short and snappy. This isn't just another financial term to throw around at dinner parties. It's a revolutionary way to think about borrowing and lending money. Imagine this. You need some cash, but the thought of stepping foot in a bank makes you break out in hives. The long lines, the endless paperwork, the impersonal service, it's enough to make anyone anxious. Enter P2P lending, where you can borrow money directly from other people like your friendly neighborhood John Oliver. Disclaimer, I am not offering loans. Please don't check under your seats. This is a game changer, folks. No more dealing with the intimidating bank manager or the confusing loan terms. Now, this isn't just some shady backroom deal with a guy named Vinny the Loan Shark Lombardi. We're talking about a legitimate, transparent process that takes place on well-regulated online platforms. We're talking about legitimate online platforms that connect borrowers with investors. These platforms are designed to be user-friendly and secure, ensuring that both parties can engage in transactions with confidence. Think of it like a dating app. But instead of swiping right on potential soulmates, you're swiping right on potential returns for your hard-earned cash. It's matchmaking for money, and it can be just as thrilling. Three big players in this arena are Prosper, one of the pioneers in the P2P lending space. They offer a wide range of loan options and have a robust platform that makes the process seamless. Kiva, which focuses on microloans to entrepreneurs and small businesses around the world. It's a platform with a social mission, allowing you to make a difference while earning returns. And Upstart, which uses artificial intelligence to assess creditworthiness, offering loans to those who might be overlooked by traditional banks. Each has its own flavor, its own quirks, and its own set of pros and cons. Over the next few sections, we'll break down each platform, exposing the good, the bad, and the downright ugly. We'll look at interest rates, fees, user experiences, and more, giving you a comprehensive understanding of what each platform offers. By the end, you'll be a P2P pro, ready to navigate this financial frontier with the confidence of a Wall Street wolf, but hopefully with more ethics. You'll know how to choose the right platform for your needs, how to maximize your returns, and how to avoid common pitfalls. So, are you ready to ditch the stuffy banks and embrace the future of finance? Let's dive in. This is more than just a financial trend. It's a movement towards a more inclusive and efficient financial system. So, fasten your seatbelts, and let's get started on this exciting journey into the world of peer-to-peer lending. First up, let's talk about Prosper, one of the OGs in the P2P lending world. This platform has really shaken things up in personal finance, offering a fresh way for folks to get loans without dealing with traditional banks. They've been around since 2005, which in internet years is like forever. Over the years, they've kept up with the times, adapting to new tech and what people need. So, what's Prosper's big deal? They connect borrowers and investors for personal loans, from paying off credit cards to that dream kitchen makeover. Whether you're looking to clear some debt or finally fix up your home, Prosper's got you covered. One of the best things? The application process is pretty straightforward. No need to jump through hoops or drown in paperwork. It's all designed to be user-friendly and quick. You fill out some forms, they check your credit, and boom. In a few days, you could have the money you need. It's way easier than dealing with a traditional bank. You could get a loan from a bunch of eager investors. These folks are looking to diversify their portfolios and earn some returns, making it a win-win for everyone. Prosper offers a decent range of loan amounts and terms, giving you some flexibility. Whether you need a small loan for an unexpected expense or a bigger one for a major project, Prosper has options. But hold on, because there are some catches. Like any financial product, it's crucial to read the fine print and understand the potential downsides. Prosper charges origination fees, which can take a chunk out of your loan amount. These fees are deducted before you get the funds, so make sure to factor them in. And don't forget about interest rates, which can vary based on your credit score. If you have great credit, you might get a lower rate, but if your credit isn't so hot, expect higher rates. If your credit history looks like a Jackson Pollock painting, chaotic and colorful, be ready to pay more. High interest rates can really add up over time. So, is Prosper right for you? It depends. Weigh the pros and cons and think about your financial situation. If you've got a decent credit score and need a personal loan, they're worth a look. The platform's ease of use and quick access to funds can be a big plus. But if you're buried in debt or have a credit score that would make a banker faint, you might want to check out other options. High fees and interest rates could make things worse. It's always smart to shop around and compare different lending platforms. Each has its own terms, fees, and interest rates. So doing your homework can save you a lot of money and stress. Talking to a financial advisor can also be super helpful. They can help you understand the ins and outs of taking out a loan and guide you to the best decision for your financial health. Ultimately, the goal is to find a solution that helps you reach your financial goals without making things worse. Whether it's through Prosper or another platform, make sure you're making an informed choice. Remember, a helping hand can be awesome, but it's crucial to understand the cost. Make sure you know all the terms and conditions before committing to any financial agreement. Alright, let's dive into Kiva, the heartwarming hero of the P2P lending world. Their mission? To fight poverty by linking lenders with entrepreneurs in developing countries. Think of it like microfinance, but with a global online twist, making it accessible to everyone. So here's how it works. You scroll through profiles of borrowers, from farmers in Peru to weavers in Cambodia, each with their own unique story and loan request. You can chip in as little as $25, and Kiva pools your money with others to fund the loan. The coolest part? Kiva loans are interest-free. Yep, you heard that right. 0% interest. Sounds like a dream, right? Well, there are a few things to keep in mind. First off, Kiva loans aren't risk-free. Borrowers might default, and you could lose your entire investment. Second, since the loans are interest-free, you won't see any financial returns. This is all about making a social impact, not fattening your wallet. So, is Kiva the right fit for you? If you're looking to make a real difference in the world, and are okay with the risks, then Kiva could be a great choice. But if you're after a purely financial investment, you'll need to look elsewhere. So, let's talk about Upstart, the new kid on the block with a data-driven twist. This innovative company is shaking things up in the financial world by using cutting-edge tech to change how lending works. They use artificial intelligence and machine learning to figure out if you're creditworthy, going beyond just your credit score. By looking at a bunch of different data points, Upstart aims to give a fairer and more accurate picture of whether you can pay back a loan. Think of it like the Moneyball of lending. But instead of finding undervalued baseball players, they're finding undervalued borrowers. Just like Moneyball changed baseball with data analytics, Upstart is changing lending by using data to find creditworthy people who might get overlooked otherwise. Upstart's algorithm looks at things like your education, job history, and even your college major. Yes, really. This lets them get a fuller picture of your financial situation and potential. For example, if you're a recent grad with a degree in a high-demand field, you might be seen as less risky, even if you don't have much credit history. This can be a game changer for people with thin credit files or a few dings on their record. This fresh approach can open doors for many folks who have been left out by the traditional financial system. Imagine getting a loan based on your potential and future prospects, not just your past financial behavior, but relying on algorithms isn't all sunshine and rainbows. While the tech is impressive, it's not perfect. There are worries about how transparent and fair these automated decisions are. Some critics say Upstart's model might keep existing biases alive, possibly discriminating against certain groups. If the data used to train the algorithm has biases, those biases could show up in the lending decisions. And let's not forget about mistakes. Algorithms are only as good as the data they're trained on. And even the best ones can mess up. A glitch or bad data could lead to wrong assessments and unfair lending decisions. It's important to remember that while algorithms can handle tons of data quickly and efficiently, they lack the human touch. They can't get the nuances of individual situations or the context behind certain data points. This can sometimes lead to decisions that a human lender wouldn't make. So, is Upstart the future of lending or a potential disaster? The jury's still out. The potential for innovation and inclusivity is huge, but so are the risks and challenges. It's a delicate balance that needs careful handling. If you're cool with an algorithm making lending decisions and want a potentially more inclusive option, Upstart is worth checking out. Their approach might help you get financing that traditional methods wouldn't offer, but if you prefer the old school way, you might want to stick with traditional banks. They have a long history and established methods that many find reassuring. They offer personal interaction and judgment that algorithms can't match. In the end, choosing between Upstart and traditional lenders comes down to your comfort level and financial needs. Both have their pros and cons, so weigh them carefully before deciding. Whether you go for the future of lending or stick with tried and true methods, the key is to make an informed choice that fits your financial goals and values.